Over IRS Form 2439, Notice to Shareholder of Undistributed Long-Term Capital Gains. Most taxpayers should not see this form. However, this is an informational form that you may receive at the end of a tax year if you own shares of mutual funds, unit investment trusts. Those are known as registered investment companies, or if you own real estate investment trusts, known as REITs. So in this video, we'll go over what the registered investment company or the REIT is supposed to report to you, and then we're going to go over taxpayer responsibilities on how you further report this to the Internal Revenue Service. So undistributed long-term capital gains are basically what they sound like: capital gains for which the company did not distribute the money to the shareholders, but retained it for their purposes while possibly paying the tax or having to at least report this as a taxable event. So we'll go through each section. Before we do, I'll acknowledge that there are 4 copies of this form: copy A, B, C, and D. Copy A, the registered investment company or the REIT will actually attach that to their Form 1120 and send that to the Internal Revenue Service when they file their tax return. For copy B, which you'll see on page 3 of the form if you obtained it from the IRS website, would be what you receive as a shareholder, and then you would attach that to your income tax return. So for individuals, your Form 1040, for estates and trusts, Form 1041, for corporate shareholders, whatever the corporate return is. So this would be for the tax year that includes the last day of the investment company or the REIT's tax year. Copy C is issued to the shareholder for their records retention requirements. And then copy D is actually retained by the investment company or the real estate investment trust. All of these are the same. However, I have pre-filled copy A, so we'll go through that in a little bit more depth. Let's start by, we're going to go through the left side of the form first. We'll go over the tax information on the right-hand side, and then we'll briefly discuss taxpayer reporting responsibilities. So on the left-hand side, at the very top corner, you'll see that we've entered the name, address, and zip code of, in this case, Acme Real Estate Holdings is a fictional REIT that issued our fictional hero, John Doe, this Form 2439. So you should see the name, address, and zip code, the identification number, shareholder's identifying number, and then the shareholder's name, address, and zip code. Now, most of the time, what you will see as a taxpayer is a truncated version of your taxpayer ID number, whether it's your social security number for individuals, whether it's the employer identification number for corporations, estates, and trusts, and other entities. However, the reporting company or trust cannot truncate their own identification number. That will be in your form. And on copies A and D, or copy A that goes to the Internal Revenue Service, you'll actually see the entire identifying number. So any copy that is reported to the IRS will contain the entire taxpayer identification number. On the right-hand side of the form, at the very top, you'll see calendar year, or if the regulated investment company or REIT has a tax year that does not fall in line with the calendar year, known as a fiscal year, then you would see beginning and ending dates for their tax year. So if the investment company or the REIT does not have a calendar year tax year, then you would report this information in the tax year for which you received the Form 2439. So in Box 1A, the company or trust will enter the total amount of undistributed long-term capital gains that's allocable to each shareholder. So this $300 represents John Doe's undistributed long-term capital gains based on his ownership in this REIT. So for shareholders, you would report this information as a long-term capital gain on Schedule D of your tax return. So for individuals, you would put this on line 11 of column H of Schedule D for your Form 1040. Estates and trusts would report this in the appropriate line on Schedule D of your Form 1041. For corporate shareholders, this amount is reported on IRS Form 8929, is Schedule D. And then if there are amounts in either Box 1B, 1C, or 1D, they have different tax treatments, so we'll go over those fairly briefly. In Box 1D, or 1B, this is unrecaptured Section 1250 gain. So this likely would be reported by a REIT, as it has to do with Section 1250 property, which is rental real estate. So this individuals would file this on line 11 of the unrecaptured Section 1250 gain worksheet, which you can find in Schedule D. Estates and trusts also have an unrecaptured Section 1250 gain worksheet, but it's in Schedule D of the Form 1041 instead of Form 1040. In Box 1C, this is the amount of gain attributable to Section 1202, which is the sale of qualified small business stock. Generally, to meet this requirement, the stock must have been issued after August of 1993, and the shareholder must have held it for at least 5 years. So August 10th, 1993, and it has to have been held for more than 5 years. So this would be the shareholder's allocable portion. And then in Box 1D, collectibles have a separate tax treatment regardless of holding period. So when we talk about long-term capital gains, we're talking about gains on assets that were held for at least 1 year plus 1 day. Anything that's less, 1 year or less, would be considered a short-term capital gain and subject to treatment as ordinary income. So long-term capital gains have different tax treatment, and within that section, collectibles, regardless of long-term or short-term, have a 28% gain tax. So we've just assumed, for this purpose, that the $300 was divided equally into these three boxes. That does not necessarily have to be the case because each of these types of gains are subject to different tax treatment. That does not mean that they add up to the amount in Section 1A. For example, this could be completely acceptable where there's $500 of total undistributed gains, but only $300 are in either Box 1B, 1C, or 1D. Or you could have 0 in each of those. In Box 2, simply this is the tax that was paid on the amount in Box 1A. So taxpayers can apply for a refund or credit of this tax as determined in the form instructions. So for individuals, non-resident aliens, and estates and trusts, you would report this for individuals you would report this on IRS Schedule 3, line 13A. For estates and trusts, this would go on Schedule G, line 16A of your Form 1041. For corporations that are not S corporations, they would report this either on Schedule J, line 20A of IRS Form 1120, or on line 5F if they're filing IRS Form 1120-F, which is for foreign-based corporations. For S corporations and partnerships, they would have to refer to the instructions on Schedule K and K1 for their respective forms, either Form 1120S or Form 1065. Tax-exempt organizations and certain trustees, for example, for IRAs, would report this either on IRS Form 990T for tax-exempt organizations, or for trustees in an IRA, they would file a composite 990T to claim the refund that way. And then there are certain procedures that nominees must follow if they are not the actual shareholders. What you might see as the actual shareholder, if there's a nominee, they would receive this form, and then they would have to issue you a specific form, and their information would actually be at the top as a nominee. So it would be so this is how you would possibly see this. And if you received it in this format from a nominee, then the nominee would file the paperwork they received from the regulated investment company or the REIT with the IRS, and then they would then in turn complete a new 2439 with identical information and give that to you. And then they would keep copy D of the original for their records. So a nominee has 90 days after the close of the tax year for the RIC or the REIT to complete the steps as outlined in the form instructions and give you a copy. If they're acting as a custodian described in Section 851F, as a unit investment trust, they have 70 days, and if the nominee is a resident of a foreign country, they have 150 days. In general, if you're receiving this form directly from the REIT or the regulated investment company, you should expect to receive this form within a certain period of time after the end of the tax year. I believe it is 60 days. That information is actually in the article itself, and I will report this in the comment section of this video. So that's all we have for this tax form. If you want to read about it and look at the instructions in more depth, we've written an in-depth article which you can find on our website. Simply go to teachmepersonalfinance.com, type in IRS Form 2439, and you'll see our article appear. If you like our articles, please subscribe to our newsletter. And if you like our YouTube videos, please subscribe to our YouTube channel. If you have any questions or comments, please post them in the comments section. Thank you very much and have a great day.